Well, I'm gonna try and cover a few different things today. I usually fail when I do this, and I always end up talking about just one topic. But let's see if I can do this. So, the first thing is there's a lot of talk going around now about the lab leak hypothesis because there was some leaked document from 2015 where the Chinese military is talking about weaponizing bat coronaviruses. And supposedly what the document says, and I don't think that the document itself is available publicly, I think that it's media figures who have their hands on this document, and so they're taking it and interpreting it, kind of similar to that leak that we got about these interviews a few weeks ago with the foreign minister of Iran, and things that he was saying about how John Kerry told him about Israeli airstrikes in Syria. And so you do have to kind of take into account that this is a game of telephone, and that the media is reading a document in Mandarin, interpreting it, and then translating it themselves, and then writing their summary of it in a story. But I don't say that as a way to try and vindicate the Chinese or try and shift blame away from them. From the very beginning, from I believe January of last year, assuming that the videos have not been taken down by YouTube, you probably can find me talking about the lab leak hypothesis very early on, and it seemed clear to me that that was the most obvious origin of this virus. I came to that conclusion based off of everything that we knew early on. That seemed, if you look at the city of Wuhan, that seemed to be the most suspicious place in which this could have originated. This was the top suspect. There were reports in the past about how this lab was not secure enough, and that international observers feared that there could be some sort of a leak from one of those labs of a virus that gets out into the population in Wuhan. After all, that's why us memers on the internet started calling it the Wu flu. I picked that up originally from Mr. Mediocure, who is sadly no longer on YouTube, and apparently has a lot of health problems. I hope he's doing well. I don't know if he came up with the idea of the Wu flu, but the Wuhan Institute of Virology, this was all very early, from a very early time. Those of us who were not following the media narratives, those of us who were afraid of this virus before the media and Fauci said we should be afraid of it, back when the media said this is no big deal, it'll never spread outside of China, and then when it did, they said, okay, well, it's no worse than the flu. And frankly, I feel like a document similar to this already leaked. I thought we knew that the Chinese military had a bioweapons program. I mean, isn't that common knowledge? The U.S. has a bioweapons program too, fairly certain. So this should not be at all surprising that they were looking at engineering viruses, or at least repurposing them as biological weapons, because as apparently this Chinese document says, you could use it to try and cripple the medical system of an enemy nation. That's a great way, like let's say if you wanted to invade a country, you release this bioweapon, and then their hospitals get filled up with sick people, so they can't treat anyone who's actually wounded in the war, and they can't, you can't, and so then it just becomes that much easier to invade and defeat the country. I mean, just think about SARS blankets, or not SARS blankets, that's from South Park, smallpox blankets, which infected the Native Americans and crippled their society. Even though I'm pretty sure that wasn't intentional. I think historians generally agree that the European settlers or conquerors, because not all of them were settlers, some of them were just there to conquer land and go back to Europe. I don't think that they intentionally infected all these people with these new diseases that their immune systems had never encountered. But the effect was to greatly weaken their societies and make them much easier to take over. And so none of this is like a conspiracy theory or anything. It's just pretty much common sense. Now, I think it would be a conspiracy theory of some sort to say that the Chinese intentionally released this and inflicted it upon the rest of the world. If they did, that would be a very dumb decision, and I don't think that the Chinese are dumb. So to me, this seems pretty unintentional, because if it was intentional, why would they purposefully leak it in one of their own cities first so that it would spread throughout their country before infecting the rest of the world? And also, why would they, release it into the city in which the lab in which this virus was being researched and potentially developed, to the extent that it is the product of gain-of-function research, where it was being it was being manipulated genetically by the scientists to try and make it more deadly? Why would they release it into that city? It would just be too suspicious. So to me, the obvious conclusion here is that it was accidentally leaked. As far as that's concerned, I've seen no real new information in the last almost year and a half, since this started. We had enough information pretty early on for me to make that determination. I've seen no new information, despite the fact that this occasionally will come up in more mainstream circles and people will start talking about it, once or twice. I think there was one time before when people started saying, oh my gosh, now the mainstream is accepting the lab leak hypothesis. I guess what triggered it this time was Josh Rogan, who I guess works for the Washington Post, said something about it on Joe Rogan. But just because some hack from the Washington Post says this doesn't make it true. It's no more plausible now than it was back then. So topic number 1 out of the way. I'm going to cut it off there. Topic number 2, I don't have a ton to say on because we don't know a ton about it yet, but it's this hack of the pipeline, the Colonial Pipeline, which apparently runs from Texas to New Jersey and supplies 45% of the oil supply to the east coast of the United States. Now, hard to say what this is about. Again, top suspect you would think would be China, but it also could be there are hackers in other with other goals. Because I think probably the easiest explanation for this would be, you could say, okay, Chinese military hackers who are testing, sort of probing the weaknesses of U.S. infrastructure. Obviously, the Chinese are not invading the United States, and frankly, I don't think that they ever will, because as much as nuclear governments like to plan to go to war for one another, if any of them ever did go to war with one another, it would be, the global apocalypse. Nuclear countries cannot go to war with one another. That's just a fact. So I don't want to come out here and sound like I'm fear-mongering about war with China. That's not going to happen. And if it did, it would be the end of us all. So it's not something that's worth considering. It's something taken completely off the table. Now, that doesn't mean that leaders can't make bad decisions and have that happen anyway. Well, let's just say I highly doubt that. I don't have a ton of faith in, Joe Biden's competence. Although I don't think that he would go to war with Mr. Xi, and Mr. Xi is certainly smart enough not to want to, go to war with another nuclear power. So if the Chinese are at all connected to this, it's just sort of think of it like an insult that they're trying to inflict, or trying to send a message to the United States, trying to say, hey, we can reach out and touch you. Now, there are other alternatives as well, just that are less likely. Hackers could be eco-terrorists of some kind that want to cripple fossil fuels. That's always possible. I mean, fossil fuel companies are big targets, and they have a lot of haters. And then the third possibility I see is like a ransomware kind of thing, or a ransom hacker, where hackers break in and they shut down the pipeline and they demand, billions of dollars from the oil companies in order to give them back access to the pipeline or something. But as far as from what I've seen from the news, we don't know yet. But those are my initial reactions as to what it could be. Either way, it's something that I don't see being a long-term problem. I see it something that would, kind of just go away on its own. I don't see it being a huge problem for the oil market in the long to medium term. Maybe there's some kind of spike when the futures market opens, but other than that, I don't see much. Now, last thing I wanted to discuss is, again, inflation. Something that I started to talk about yesterday was I'm starting to become a bit disillusioned with the bond market. I don't think that I'm at the point yet where I'm willing to give up hope and say that the bond market is completely broken, because again, I think the bond market is the most durable of all the financial markets as far as discipline goes. I think that the bond traders still do have some power, and that they're not completely beholden to the Fed, that there's only so much that the Fed can do at this point to manipulate the bond market. They're not trained seals in the same way that the stock market and the real estate market has become. But with that said, I've been talking about, hey, inflation's here. We can see it. It's all around us. It's something they're talking about on mainstream news now. Which is quite remarkable. I don't often ever turn on cable news. I happened to see some this morning. It was just a few minutes, and they were talking about inflation and all the prices of everything that's going up. And once talk of inflation reaches that sort of a level of society, to where people watching mainstream normal news who don't think about finance all the time are seeing on the news, oh gee, prices are rising, inflation is here, that starts to change consumer behavior. And of course it'll change the behavior of small to medium sized businesses, because even though there have been people citing I think it was Bank of America has monitors mentions of the word inflation or price increases on earnings calls, and they said that they're up like 800% month over month. That doesn't necessarily trickle down immediately to smaller and medium-sized businesses, because your higher market cap, your global corporations, might be a little more in tune to that, but it doesn't take much time for that to trickle down to where the little guy, it becomes just as concerned. And when that happens, it's not just the big companies who have to cut back on production or raise their prices. It's also, the small and medium guys, and it's also the consumer, who starts to think in a different way of, okay, if we're in this kind of inflationary environment, how do I survive? How do I still get the resources that I need? And we get to a point to where people start to expect inflation and start to price it in to things. People start raising prices on their own. It becomes fashionable to raise prices, and so therefore, once an economy sort of shifts into gear on inflation and accepts that as a reality, you will see much more easily prices start to rise all around. Because at first what you see in an inflationary period is you see lots of shortages like we've been experiencing. And businesses are reticent to raise prices because they understand that customers don't like higher prices. And so, they sell what they can at their regular price, and then, they sell out quickly. But eventually, if the supply side is so constricted, is so minuscule relative to demand, prices do begin to creep up eventually. And then in time, once prices of certain goods starts rising quite a bit, it becomes normalized for prices in general to rise. And so this brings me back to the bond market yesterday. If people are expecting higher inflation, if everyone from CEOs to small business owners to consumers to the viewers of CNN, if they're expecting higher inflation, why isn't the bond market? Is the bond market really just going to take the Fed's core PCE or CPI number at face value? Is the bond market so controlled that all the Fed has to do is manipulate CPI to not reflect the real inflation that we're seeing right now in order to keep interest rates down? If that's the case, things in this country are going to get worse than I expected, because what I have been waiting for since it became clear that the Fed was not going to raise rates on their own is that the bond market was going to raise rates once the Fed created a significant amount of inflation. But if that's not going to happen, if we're going to have a period in which we have relatively high inflation and near 0% interest rates still, then there is, there's no end in sight. I mean, it's hard for me to comprehend how we could be entering stagflation in the real economy while asset prices continue to keep hitting all-time highs. This didn't happen back in the 70s. Back in the 70s, your assets were not good. And by assets back then, the bubbles that burst were stocks and bonds. Treasury bonds and stocks were not something you wanted to own back in the 70s. It was not a good way to make money, and that was during the time of stagflation. It wasn't until the end of stagflation and the new Greenspan bubble of the 80s that treasuries and stocks became cool again. But if we have rising consumer prices and rising asset prices, well then, I mean, it's just plain inflation. Especially again, if we're not going to have economic growth, we're going to, the economy is not in good shape. We're not producing more things. So, put that out of your mind. We are, at the best case scenario, going to have stagflation, which is a stagnant economy with high inflation. But if asset prices continue to rise, along with the prices of consumer goods, and interest rates do not rise, because of the inflation premium, well, then we just become Venezuela. And that's, again, something that, perhaps it's my positive bias. I don't want things to get that bad. I want things to get bad enough to for the situation to correct itself. But I don't want things to get, like, apocalyptically bad where people are starving in the streets. But if you look at the returns on Venezuela's stock index, stock market's done great in Venezuela over the last few years. But that's, of course, only if you look at it in nominal terms. If you look at it in real terms and you price in inflation, the stock market in Venezuela is not doing very good at all. And, we could end up in a similar situation with the U.S. stock market. That is, unless the bond market wakes up and does something about it, because the Fed is not going to change its ways. I was listening to Neil McCoy Ward's stream from yesterday, and I very much disagree with him. I do not think that the Fed is going to try and resuscitate the patient here as far as the dollar is concerned. I think that the Fed is far too arrogant. I think that the problem is that Neil is looking at it from his own perspective and saying, well, gee, if I were in the Fed's position, as soon as I get a whiff of inflation, I'd want to stamp that out so that I could keep my power to still manipulate markets, because if the Fed inflates away the dollar and devalues the dollar, the Fed loses power in the long run. But I tend to think that the Fed is far too arrogant for that the Fed doesn't think that the dollar can be harmed in any way and that inflation will ever be a problem. Heck, there are still people operating on the Phillips curve who are saying that this poor jobs report shows that we don't have to worry about inflation. I mean, like, who are these people who are still stuck in the early 1960s? There is no inverse relationship, directly between unemployment and inflation. Just because unemployment went up does not mean that inflation is going down. The reason why Phillips observed a relationship between these two things was because, in sort of a very basic economy, if the government, prints a lot of money to stimulate the private sector and business, and lowers interest rates so that companies will expand their businesses, well, these companies are going to take out loans, they're going to expand their business, and they're going to hire more people. They're going to, and so therefore unemployment will fall. But at the same time, because that money that they're borrowing is printed and being injected into the real economy, it will cause inflation. So that's why Phillips observed a relationship between, unemployment falls, inflation goes up. Inflation goes up, unemployment falls. No, this is ridiculous. There's so many other variables to consider. And so if there's still enough people at the Fed who are buying into that garbage of the Phillips curve, well then, they are probably taking the same message, because again, they're hearing, when they're reading the economic news, they're only taking seriously the stuff that that confirms their bias. So the Fed wants to keep interest rates low because the Fed wants asset prices to keep rising. They want the stock market to keep going up and up, and they want the bond market to keep going up and up. They want interest rates to stay low so that companies can keep borrowing more and more money, and so the federal government can keep borrowing more and more money. And so even if the Fed knows that the Phillips curve is oversimplified and not very useful, they will happily take this, try and interpret this news of higher unemployment and way less people being hired than was expected in the month of April, and take that and run with it and say, well, gee, isn't this just justification for us to keep on doing what we're already doing? And so that's why you can't count on the Fed to raise rates. So that's why this year, the next few months, is going to be crucial for the bond market. The bond market needs to wake up and start forcing interest rates higher. If the bond market doesn't do that, again, that's our only hope at this point. We're going to move into a period of sustained higher inflation and stagnant economic growth. We're going to end up like any of these Latin American basket cases. Hopefully not as bad as Venezuela, but probably as bad as Argentina. I might have to do more research into the past experiences of Argentina, since I've been through a lot of similar situations like this, so that I can maybe try and get some more detail about what that would look like. But it's not a scenario that I've considered thus far, because I've had faith in the bond market. And again, there's still time for them to react. We're just now getting to the point to where people are talking about inflation, but I tend to think of the bond market as forward-looking. So I would have, if you had asked me before we got into this situation, who would be concerned about inflation first, the bond market or CNN, I would have said the bond market. But I guess a lot of this is that the bond market, unfortunately, still has faith in the Fed. They still think that the Fed might raise interest rates on their own, and therefore inflation is not that big of a deal. But then again, if that was the case, if the bond market was counting on the Fed to raise interest rates, the bond market would be pricing in the Fed's interest rate hikes. Whereas the Eurodollar futures market, which again is a similar pool of highly intelligent investors, they started to price in more dovish Fed after this jobs number, which I think is correct. I believe Eurodollar futures was pricing in a rate hike somewhere in like around early to mid 2022, and after this jobs number, that was pushed out all the way to 2023. I think the Fed very clearly is just going to play this game where they pretend that there is no inflation, and the bond market so far is going along with it. And so make no mistake, the economy is not coming back with what's going on right now. All of these stimmies and the government intervention is prolonging this crisis. They're making the problem much worse. That was the key takeaway from that jobs number on Friday. And if you haven't listened to that, go back and listen to what I had to say about that. Handing people money and paying them not to work is disincentivizing production while stimulating higher consumption. The end result of this is, of course, inflation every single time. And so if the government is continually empowered to do this by both the Fed and the bond market, because no one will raise interest rates, they will continue to do this, which means that inflation will only continue to be as bad, or if not worse, in the future. Inflation is a signal that tells you that as a society, you're running a deficit of production relative to consumption. You are producing less and trying to consume the same, or consuming more and producing the same. This is exactly the problem that they ran into in Venezuela, and the reason why the problem never went away is because they've never accepted the problem. They wanted to blame it entirely on U.S. sanctions, which again exacerbated the situation, and one of the reasons why I don't think that things will be as bad for the U.S. as Venezuela, because Venezuela had a lot more going against them than just their domestic government's horrible policies. But what happened to Venezuela is that Venezuela had a very generous welfare state, giving people lots of money, and they paid for that by exporting lots of oil. And there was a big boom in the oil industry and in the price of oil back in the 2000s. And after 2008, I believe, the price of oil started to come down. And when oil was no longer at record highs, when oil was no longer over $100 a barrel, Venezuela could not continue to afford to finance its generous welfare payments. And so what they did was they printed money so that they can continue to make the payments, which of course just devalued their money, because there was not real hard resources being traded between Venezuela and other countries. Venezuela could not export their oil and import consumer goods anymore. They could only pay for so much goods with what they produced as a country. What they were producing was no longer of an equal value. And so therefore, as a country, they could consume much less than they did before. And so they had to print more and more money to try and replace that lost consumption, because the same amount of money no longer bought the same amount of goods. They kept trying to give people get them back up to that standard of living, but in doing so, all they did was continue to devalue their money more and more. And that's what we're going to witness here in the United States if we continue down this particular path, and the bond market does not intervene. Now, thankfully, we're nowhere near hyperinflation yet. Again, that is an H word. I do not like to use that. I think that it was overused a lot after the initial QE program back in 2008, 2009. Because you see, hyperinflation is a very deliberate act. Whenever a government does it, it's very easily avoidable, and that's why it doesn't happen except in only a few cases, because the government just has to be so brazen and want it to happen in order for it to actually happen. But high inflation that makes it very difficult for ordinary people to live their lives, that makes it impossible for them to maintain their standard of living, that sort of inflation is definitely on the table. So I think I will cut it off there for today. I'm dying of thirst.